What's up, Hyperfast Nation? On this episode of the Hyperfast Wealth Show, I sat down with a commercial real estate broker and investor. He started 6 years ago, quickly built a commercial sales business doing, 2, 3, 4 deals a month. So he's built up a huge business there. Now he's done a bunch of multifamilies that he's invested in. His latest deal is a $21 million acquisition that he's raising funds for. Welcome to the show, Jason Lee. Welcome to the show today, Jason. How are you doing?
I'm good. How about you?
Good. I know this is a crazy time in the market for anything real estate, really for anything in any like investment markets, but you've got some great insights from your experience investing and brokering multifamily deals. I'm sure we're gonna get into that today. Before we do though, tell folks a little bit about who you are, how you got to where you are right now.
Yeah, so my name is Jason Lee. I'm the managing broker at JLM Real Estate here in San Diego. We have a team of about 8 agents. We focus on multifamily real estate all throughout San Diego County. And I also own and operate a portfolio of about 78 units down here in San Diego, totaling about $25 million in portfolio value. Got into real estate through, honestly, just networking during my days in college through San Diego State University, and decided to never leave San Diego after I got my internship. So that's how I got my start, and that's where I am today. And through long hours and hard work, things paid off.
So how long have you been doing it now?
Almost 6 years.
Okay. What was it like starting out? Because I think for a lot of us practitioners that are doing it all the time, it can, we kind of forget about that part sometimes. And a lot of people that are listening to this, or maybe haven't dipped their toes in the water yet, they're wondering like how they get started. So how did you get started? How did you know this is what you wanted to do? How did you find that first deal? How'd you execute on it?
Yeah, it's a great question. I think the most important thing that people should remember when getting started is choosing and finding a great mentor. I think having a good, broker or some sort of mentor figure, or whatever niche you're in, I think is extremely important. I think learning from someone instead of figuring it out on your own is a much faster track to success. So I think finding someone who can kind of lead the way, and someone who's doing what you want to do in life is extremely critical to becoming successful in real estate.
Where did you find your mentor?
Yeah, so my mentor I found through the Real Estate Society at San Diego State. So I joined a bunch of clubs on campus trying to network with older professionals, and I found them that way. If you are not in college and you are already in the workforce, a great way to network with people is just by providing value and giving someone a reason to meet with you. So I know a lot of people try to meet with me and other people in the industry and don't offer anything, just ask for our time. And I think offering something in exchange for our time will help you get your foot in the door. So that's my tip for anyone who's looking to find or meet a mentor.
Let's talk about that first deal. How did you find it? What was your role? Were you did you sell the deal, broker it, or were you an investor in it, or have partners? How'd you get the first deal under your belt?
Yeah, so first deal I ever did, it was a fourplex in City Heights, San Diego here. It was a listing that I got, so that's the first deal I ever did. And basically I got it through just calling every single day, reaching out to property owners, seeing if they're looking to buy or sell. I caught this owner at the right time, set a meeting with him, met with him with my broker, and ended up liking us. He was very motivated to sell, and we ended up getting a listing agreement signed. From there, we marketed the property and got a lot of offers, but right before we chose an offer, his dad, who was on title, ended up passing away, and the property went to probate. So that really sucked. And a probate attorney got us out of that spiel in like 2 to 3 months, but my first deal got delayed because of a super, unknown issue that I had no idea even entailed. So yeah, that was how I got my first deal.
How long did it take you to get that deal? Like, how long were you calling people for?
Yeah, it was about 5 months. So it was about 5 months till I got my first deal. In commercial real estate, it's super hard to break in and get your first deal, but once you do it, it kind of snowballs and moves really fast if you keep the momentum going. But in the beginning, it's really tough because you're going in and trying to meet people, network, and nothing's happening. It feels like nothing's happening, but every day you got to chip away and keep the database growing.
So one deal in your first 5-6 months, which for many people, that's what it takes, residential or commercial. What did the next 6 months look like after that? You said it snowballed. So what did the second half of that year look like?
Yeah, second half of that year closed. Well, that was like at the end of my. So I started like the middle of like summer, and then that deal I got in like October, and then the next 6 months after that, I closed about 7 to 8 deals, and then the next 6 months total, I closed about 12 properties. So it snowballed pretty quickly.
Yeah, I mean that's a great trajectory. Of most people just quit in that first 3 to 4 months, so they never get to that kind of S curve up or that hockey stick up, which is unfortunate. So you gotta stick through it. Let's fast forward now 5 years later. What is your business like? Are you spending more time on the brokerage side, doing your own deals? What does your business look like now?
Yeah, I'd say it's pretty 50-50. I'm running my team as a broker and helping them succeed by going to their meetings, helping them with follow-up calls, teaching them the business, and also managing my own client base as well, and helping them buy and sell and improve their portfolio. And then also on the other end, I'm also managing the construction on my own portfolio, and then doing rehabs, flipping properties, doing 1031 exchanges, trading up. So yeah, just all things real estate for sure today.
What does your ideal deal size, like what does your deal box look like? Are you looking for new, old, ground up? How big?
Yeah, so are you talking about me as an investor or me
as
selling properties?
As an investor.
Yeah, as an investor, my average deal size that I've bought has been anywhere from 1 million to 5 million. Haven't raised any outside capitals with me, 50-50 with a partner so far. But we've bought very distressed properties from owners who needed to sell and their properties were not operating well at all. So we took that and put a lot of money into construction on existing product, not ground up, and basically turn the income from let's say a property was bringing in $7,000 a month. We took that income to $12,000 a month. We bought that property for $1 million, sold it 6 months later for $2 million. So that's kind of been the business model that I've done in the past. But I do have a pretty big property under contract. I've got a $21 million property under contract, which I'm raising money for the first time in my life, but here in San Diego. And that one's a pretty similar product type. It needs work. Rents need to be increased. You can add units by converting the garages into additional dwelling units. So yeah, that's my history so far.
Hey, hold that thought. Do you want to get 100 tips for free from my best-selling real estate book, The Hyperlocal Hyperfast Real Estate Agent? If you do, go to hyperfasttips.com and you can download 100 of my best tips today. Again, that's hyperfasttips.com. You can download 100 tips on how to grow your business, get more clients, deliver more value to more people. Go to hyperfasttips.com.
What kind of terms are you thinking about or raising money?
So the equity raise is like $7.5 million. We've raised about 4 to 5 so far committed. Basically the terms are the investor gets a 15.5% IRR or return on their money over 10 years, and then and they're guaranteed an 8% preferred return no matter how the deal does. So that's the terms for the investor.
Gotcha. What's been different? I guess for several years you've been doing this by yourself or with just the one partner. What's different now about going out and doing a bigger deal that you need outside capital on? Like, what do you have to do differently?
Yeah, that's a great question. There's a lot more moving parts. You have to, whereas let's say you're buying a deal just by yourself, all you need to worry about is making sure that the deal pencils, the numbers work, and you get, the best loan you can, and that's really the bulk of it. Whereas, if you're buying a huge portfolio that you can't do on your own, you got to manage investors, you got to pitch to investors to show that, their money is safe and it's being used in a great way by investing in the deal because they're getting an X amount of return, showing them what the potential risks are, and then handling the debt side as well is a little more complicated. If you're dealing with a bigger loan amount, you're dealing with like more institutional money. So the dialogue does change to a more sophisticated conversation, much more high level. So yeah, it's been a great learning experience so far, but I would say definitely start, if you're looking to do this yourself, I'd say start, at a lower price point and get your feet wet on your own, and then, start getting bigger. I think it's really tough to start, really big right away, and when you don't know what you're doing. So yeah, building a foundation's key. That's what I'm trying to say.
What kind of advice would you give to someone who's out there, and maybe they're where, in college or where you were 6-7 years ago? Maybe they have a mentor already, and they're trying to figure out, what they should do for their first deal. Like what should someone be thinking about if they're in that position?
Yeah. If you're looking to buy your first deal, I would say make sure you really understand what market you're investing in. I'd say knowing street by street, especially for multifamily, is very important. I know in San Diego, some areas, if you're on one side of a boulevard or a street like El Cajon Boulevard, if you're north of El Cajon Boulevard, it's a really nice area. If you're south of El Cajon Boulevard, it becomes a much worse area with different rents, different tenant base. So I'd say understanding the market you're investing is really important. I know people like to invest out of state. I would say make sure you understand that market inside and out before you put any kind of money there. That's step one. And then I'd say step two is building a good team that you can trust, that you can fall back on when you need advice. Because if you're doing this for the first time, you're going to ask a lot of questions. And if you're talking to a broker who just wants to make a commission off you and doesn't care about how you do for the long term, that's a huge red flag. So I'd say having a really good broker who cares about the relationship, that wants to, partner with you long term, is very important. I'd say the second most important thing is having, maybe even the first, is having a good property manager. If you plan on not managing the asset yourself, which I highly recommend, so you can spend time finding other deals and growing your portfolio instead of doing the day-to-day management. So I'd say finding a property manager that can advise you on the market, the potential pro forma rents, and how the property might operate is extremely important. And then having a good loan broker or a lender that can make sure that you're pre-approved for the amount that you can afford, with reserves as well, is key. So I'd say those three things are very important when you're looking to buy your first deal.
What would you tell people right now, specifically? I guess this kind of goes into the question that is on the minds of tons of people. But should they wait, right? Or should they price in a bigger discount, or maybe hold off for 6 months? Like, where do you think the market's going right now?
Yeah, I mean, two of my biggest clients who have a portfolio value of over probably $5 billion. I was talking to them about this, and in their history of investing for over 40 years, they've bought in every single market cycle. But they say to be, greedy in these kind of markets, but be very careful as well, because obviously the market is shifting. But the good thing is that there's going to be less competition. Interest rates are going higher, so make sure you price in your deals with higher cap rates and higher returns to make sure that the deal can cash flow or sustain itself day one. So I'd say be extra conservative on debt right now. Don't take a bigger loan amount than you can afford. Be extremely conservative on that front. But I would say look for deals that have upside day one. If the market's if the average home price in San Diego is $1 million and you're looking to invest in a property, I'd say, try to find a property that's, $800,000 or $700,000, that's below market value, so you can make money on it. Or if the market does turn a lot, let's say the market falls 30%, but you bought a property for 30% under value of what it is today. Even if the market, took a dump, you would still be, at even market value if you bought it for a good deal. So I would just say be extra careful when you're buying, but I wouldn't let the fear or the doubt, uncertainty freeze you. I'd say if you have the money to buy, just be really careful, but if it's a good deal, I'd say jump on it by all means.
Where do you think the deals are going to be? Are they going to be in singles, duplexes, quads, smaller multifamilies?
Yeah, that's a great question. I think we'll see deals in every asset class, because there's more scared sellers at this point. But I think we'll see a lot of deals in the 1 to 4 unit range, because that's where the residential financing is, like Fannie Mae, Freddie Mac for the most part, and their rates have been very volatile. And there's a lot of people who can't afford homes that could afford the same price 3 or 4 months ago today. So I would say that there's a lot less demand in that area. So I think home prices, 1 to 4 units will definitely soften in most markets. I know some supply constrained markets like San Diego or like the San Francisco Bay Area, Phoenix. I know those markets, there's so many people trying to live there and move there. So it might be, not that much of a slowdown, but I know some, tertiary markets could definitely take a hit. So, yeah, that's my answer to that question.
Hey, hold that thought for a minute. Do you want to take your real estate business to the next level? If you do, there's no reason to go it alone. Learn from people who've been where you want to go. Carrie and I have sold billions of dollars in real estate. We've netted over 7 figures for 7 years in a row now, and we want to see if you would be a good fit to work for us. We don't work with a lot of people, but we want to give you a chance to get on a free strategy call to see if we can help you get your business to the next level. Go to hyperfastcoach.com and apply for your discovery session today. Again, that's hyperfastcoach.com.
How do people go out and find like these kind of deals? Like what's worked for you, and what do you think is going to work, now and in the next 6 months or so? Like best ways to go out and find a deal that's 20 to 30% under market value.
Yeah, great question, Dan. So I think what's worked best for me, honestly, I know most people don't like doing it, but I was a phone guy. I've called a lot of owners in my life, so that's how I found 90% of my deals. I've dabbled in, like social media marketing, PPC, pay-per-click ads on Google, and direct mailers. I'd say if I were to rank what's worked best for me, I'd say number 1 is just direct outreach, whether you're texting or calling an owner. And then number 2 would be direct mail, like postcard campaigns. And then the other 2, like internet marketing, hasn't worked too well for me. But I know people who crush it on every single platform. So I really think it just depends on what you enjoy doing or what you're good at. So like if you hate being on the phones, maybe just text or email or send mailers to people, or do internet marketing. But if you're a good sales guy or girl and you're good on the phones, I'd say the phones are actually still very powerful. Driving for dollars is a very good method if you're first getting started. I think if you're driving your local area and you just write down addresses of houses that look very distressed or look like they need a lot of work, that owner might be looking to cash out, in the near future. So targeted marketing that way is very good as well. But yeah, those are the methods that I've seen work in the industry, time in and time out.
Yeah, I like all of those. You're not waiting for the deal to come to you, or looking at what's listed in the MLS. You're actually either driving around, developing your own list of homes that are distressed. That maybe the roof looks bad, the maintenance has been delayed, lawn's not mowed, all that kind of stuff. I think being proactive like that is, and it might take time too. Like it took you 4 or 5 months to get the first one, and then after that, it was like the next 12 months was like over 20 deals. So I think if you're listening to this and you think you're just going to go out and do this for like one day, and all of a sudden you'll get a deal, like you might get lucky, but that's really rare, right? It's going to take a little bit of time.
Exactly. The money's in the follow-up in real estate. You got to talk to an owner at least, I think 3 to 10 times to have traction. So I think having a good CRM where you can keep up with these owners and follow up every 3 to 4 months is extremely important. Like you mentioned as well, Dan, the MLS does work, but in markets that are as competitive as where the market I am, Southern California, it's very tough to find a deal that pencils on the MLS, but rarely it does happen. Agents will misprice a listing. So for example, like I bought a property off a Coldwell Banker agent, and she had only sold homes her whole life, and she tried to price a 10-unit apartment complex, and it was just priced way off the mark, and she got like probably 40 calls in one day, but I was just one that she connected with, and I let her represent me, and I got the deal. But that happens, very rarely. So I think if you're just waiting on the internet looking to get a good deal, I think it's not a good way. I think if you actually are actively hunting, but also, maybe you spend like 30 to 45 minutes a day on the MLS or on Zillow, Redfin, etc., you can find something as well. But I definitely wouldn't bank on those platforms to find a deal.
All right, Jason, this has been extremely valuable, hearing the story of how you started off and have built up a brokerage business, and multifamily investment business. Before we wrap up, I always like to do a hyper-fast round. Are you ready for some rapid-fire Q&A?
Definitely.
All right, what's your biggest piece of advice to a new real estate investor?
I would say don't listen to the doubters and get over the fear and anxiety that'll come into your mind. Naturally, humans, when they try something new, fear and anxiety is natural, and it happens to me, happens to everyone. So confidence is built, you're not born with it. So just try to educate yourself by listening to a podcast that's great like Dan's, and take action. So that's my number one advice for someone who's going to get started.
All right, what's your biggest, what's the biggest mistake that you see successful investors make?
I would say one that I've seen people make and that I've made myself is not hiring the right contractor. I'd say vetting the right person to manage your construction is extremely critical. They can make or break a deal. I lost a lot of money on a bad contractor, so I'd say do your homework, make sure it's a referral from someone that you trust, and make sure you manage your contractor by staying on top of them, put everything in writing, and just that's very important.
All right. What's one investment that's not real estate related that you think people should be making?
I think a really good investment. I'm personally, to be transparent, I'm 100% real estate, which is probably not good, but I think right now stocks are a really good buy. I think a lot of companies that have great balance sheets and great reports are very undervalued. Like, for example, Meta or Facebook, I think is very undervalued. Companies like DocuSign. So I think there's a lot of great companies that are undervalued in the market right now.
All right, when you're not working on real estate, what would we most likely find you doing?
Probably spending time with my girlfriend and my dogs, or on the golf course.
All right, last one. Where do you see yourself 10 years from now?
Ooh, great question. Honestly, I love what I do, so I would like to keep, helping people get into real estate, helping people on my team be successful, and just keep growing my own portfolio. So other than that, personally looking to, hopefully have a family and kids, and hopefully still in San Diego. How about you, Dan?
10 years? That's a great question. No, you're like the first person that has asked me that on this show. But in 10 years, my four kids will be, I guess, ages 11 to 16. I've got 3 boys, 1 girl. So hopefully be doing a lot of cool trips with them. A lot of epic trips, and kind of grooming them to be business people and entrepreneurs. 2 years ago we moved down to Florida. We're still running running our real estate businesses in DC that are growing. So, I think building something like that down here, and just helping more and more people learn how to be real estate agents, real estate investors, and managing more and more passive income investments as well.
Love it.
I think a lot of agents and real estate investors, especially if they're flippers, like they count that the active income, but the passive income or the recurring stuff it's like 10 times more satisfying, if you know what I mean.
For sure. Couldn't agree more. Yeah.
But well, this has been fantastic. Jason, if people want to connect with you or learn more about you, what are the best ways for them to do that?
Yeah, I'd say best way is Instagram. I respond to all the DMs there, so if you have any questions, let me know. But my handle is Jason Joseph Lee, just my full name, Jason Joseph Lee on Instagram.
All right, well, look up Jason on Instagram, guys, and to all of our listeners and viewers, thank you for tuning in. We will see you next time, and don't forget to share this episode with other people that you think could benefit from its lessons as well. We'll see you later. If you enjoyed this episode, be sure and go to hyperfastagent.com to learn about upcoming in-person and online events. And don't forget to share this show with someone that you think could benefit from hearing it, and make sure you subscribe on YouTube or anywhere that you can find podcasts.
Thank you for tuning in to this episode of the Hyperfast Show. Subscribe to us if you want to make sure you get the latest and greatest Hyperfast shows. And remember, we love reviews. Reviews help us bring better and better guests and improve our shows. So give us the good, the bad, and the ugly. We hope you enjoyed the show, and we will see you next time.
Hey guys, thanks for sticking around to the end. I hope you enjoyed that video, and if you want to see more, click right here. And if you want 100 real estate tips from my best-selling book, click right here to download them instantly. And if you're new to this channel, click below to subscribe.